and welcome to everyone watching. My name is Claudine Coletti. I'm the managing editor at Forbes Middle East, and today I have the pleasure of moderating a discussion that explores a topic not just important for the financial industry and its various players, but for the world as a whole and for all of our futures: sustainable finance. Following the COP26 summit last year, global and business leaders are finally in agreement that climate change is a real threat to the future of the planet and more needs to be done. The advent of sustainable finance hands the baton to those in banking and finance to do their bit. It covers the creation of new regulations, investments, policies, and financial products, all with the ultimate aim of investing in a greener future. As part of Forbes Middle East Building the Future Summit, we've invited some of the industry's most prominent leaders to join us today to share their insights into how their companies are pursuing environmental, social, and governance, or ESG, objectives, and how they're helping their clients do the same. So let's meet our speakers. Rola Abu Mana, CEO of Standard Chartered Bank in the UAE. Richard Atias, CEO of the Future Investment Initiative Institute. Richie Kapoor, co-CEO of InvestCorp. And Pascalis Bucores, Managing Director and Country Manager at BlackRock. Thank you so much for joining us today, guys. Richard, I'd like to start with you. The FII Institute is a fairly recently established organization with an agenda focused on having a positive impact on humanity. So I'd like to hear from you. Do you think the region is moving in the right direction when it comes to ESG mandates?
First of all, I would like to thank you for having me. And as you can notice, I'm the only one who is not coming from a financial institution. So I will have to be very modest vis-a-vis the champions of investment, for who I have a lot of respect. Amazing brand. I'm very proud to be on the same panel than my colleagues. I will not say professional colleagues, but members of our community that we are welcoming every year in Riyadh, yes, at the occasion of the Future Investment Initiative. As you just said, the FI Institute, I would say, is a new global not-for-profit foundation with an international arm, and also one agenda, which is impact on humanity. So we took ESG very seriously. And I'm saying that because, back to your questions, I have to say that I see definitely more and more, I would say, institutions, corporations, governments taking very seriously this notion of sustainability. We even recently hosted in the Kingdom of Saudi Arabia the Saudi Green Initiative, followed by the Middle East Green Initiative. And I think it is showing how even world leaders are becoming very serious. And we see definitely this trend of having ESG as key principles. This is why we are trying to support many of our stakeholders in that direction. As you know, ESG investment now total more than $30 trillion as investors everywhere across the world have adopted this notion of environmental, social, and governance. So definitely it's becoming a non-choice. The money is going to corporations, to companies who are adopting these ESG principles. But then we will talk later about how we are trying to play a role, not by being disruptive or provocative, but by trying to be fair. We are collaborating precisely in the region with large asset owners and ESG experts to build an ESG scoring system based on the best science. So our goal in the region precisely, and I see a lot of commitment from, again, multiple stakeholders, stock markets, and even government entities who are joining us to provide access to fair ESG rating for investors interested in, I would say, an accurate assessment of companies operating in the most challenging context of emerging markets precisely. And we believe that more ESG investment in emerging markets will accelerate definitely progress toward a just and zero carbon society. And this is what I see people taking very seriously. I just hope that many of them are doing that because they really believe on the ESG principles and not just try to be politically correct because of the power of the media that you are representing, by the way.
Well, yeah, I agree. I hope it all comes from a good place where people are actually seeing the positive benefits. Taking a kind of global view, I'd like to turn to you, Pascalis. You're kind of regional head for one of the largest asset managers in the world. Where do you see, what do you think are the current global trends that you're seeing, and how does that compare to what you're seeing in the Middle East specifically?
Thank you, Claudine, and thank you for the kind invitation. First of all, I'm going to state the obvious by now, maybe, that we have seen unprecedented flows into sustainable investing strategies, really hundreds of billions in each of the last couple of years. And I think we are now at $4 trillion US dollars total investments on sustainable finance solutions and strategies. Europe has been leading the way. I note in particular the presence of pension funds, particularly from Northern Europe, the growing preferences of consumers and individual investors towards ESG, but also the stance of regulators and policymakers, introducing related standards in the last couple of years, launching climate financing programs, and developing strong ESG policy frameworks. In the Middle East, we see a growing sophistication, especially in the institutional space and the sovereign wealth funds. Important initiatives, both from the public and private sector, are being launched in a range of topics, from energy transition to renewables to green hydrogen, but also sustainable urban development. So a lot of activity. Here in the Emirates, I note, of course, the net zero by 2050 strategic initiative, but also initiatives by companies such as ADNOC for the use of hydrogen, ammonia, carbon capture solutions, some of them pretty innovative, but also using nuclear and solar to decarbonize their power grid. So lots of activity and a growing interest also in the region. We expect these trends to intensify and accelerate, whether it is capital flowing into new technologies and new ventures around the energy innovation and transition, or capital transferring from traditional index strategies to more focused ESG strategies. We will see a lot of money in motion in the coming years in this transition to net zero.
So I'd like to explore a bit more about those strategies that you talk about, actually getting some real examples. So Rola, over to you. Obviously, we've got a very wide breadth of expertise on the panel today. So from a banking perspective specifically, what are the ESG-based strategies that you're implementing at Standard Chartered to support and encourage the greener economy?
Thank you. And I'd like to thank Forbes for inviting me to be on this prestigious panel with my colleagues. So as a bank, we are very committed to ESG, and sustainability is one of our key strategic priorities globally. We are committed to reaching a net zero carbon emission from our operations internally by 2030, and we've gone out and declared these commitments by working closely with our vendors, at the same time from our financing by 2050. And we plan to mobilize on a global basis $300 billion in green and transition finance by the year 2030. We know this is important to our credibility as a sustainable and responsible bank, and it links closely with our approach in three areas: the business, operations, and the communities which we operate in. So really our priority is delivering the sustainable finance solutions to our clients. By the end of 2020, we've already had mobilized $2.4 billion towards sustainable infrastructure and over $18 billion towards clean tech projects. And if we look at our areas of focus, it is in the markets around the Middle East, Asia, and Africa. And these are the markets where sustainable finance matters most. Our research actually found that over $10 trillion of investment opportunities across all emerging markets is required to achieve just 3 of the UN Sustainable Development Goals. Now, if we look at the UAE, it is one of the key markets globally, where we have noticeable share of our sustainability efforts. And we have been, as a country and a market, at the forefront doing deals here, which go back to 2018, where we've done deals with DP World, a green loan. Now we continue to support our clients. We've done the transition finance, first ever bond for Etihad Airways, for Majid Al Futtaim as well. We've done a green loan and more of our leading offering. So our focus will not just be on green and sustainability financing, but also on transition finance, which is crucial for this region. We'll also, at the same time, will be assessing our exposure to emission-intensive clients, and as well as on the asset book, at the same time adding on new low carbon intensity clients to our portfolio.
Some big numbers mentioned there. You mentioned about the things that you're implementing for clients. I'd like to turn to Richie. When you're making your investments, how do you ensure that the people you're investing in are implementing ESG commitments? I mean, is it part of how you assess who you're going to invest in?
Sure. Let me start off by thanking you all for having me join this August group of panelists in discussing this very, very, very topical and relevant issue. I think, as you said yourself, Claudine, the starting point for us is really something that Richard was referring to earlier as well, which is the role that asset owners and asset managers like InvestCorp have to play in this whole journey. We currently manage investments in excess of $40 billion on behalf of our clients, right? Across private equity, private credit, real estate, and absolute return investments. And at any point in time, we have more than 50 companies that we own, either controlling stakes in or significant stakes in, more than 100 properties that we own outright, more than 300 to 600 companies, private companies that we lend to. So it's a big portfolio with some pretty meaningful numbers behind it. Now, I can tell you that, over 40 years of operations, we've had this principle of responsibility very core to our DNA right from the start. But what's true is that it's really over the course of the last 2-3 years that we have doubled down on that commitment and codified it in a very formal sense, into how we approach our investing activity, not just at the point of initial investment, but also through the holding period that we continue to own these assets for. And that whole codified structure, if you want to call it that, is really captured in a single word. It's responsibility. We've got a whole framework that we developed ourselves called the Responsible Business Framework. And around that responsible business framework, we have created an ecosystem. And the choice of the word ecosystem is deliberate because the E in ecosystem stands for responsible employment. The C in ecosystem stands for responsible citizenship, and the O stands for responsible operations. So we are focused on being a responsible employer, a responsible citizen, and a responsible operator, not just for InvestCorp as a corporate, but for all the companies that we invest into, all the assets that we own, all the firms that we lend to. And there are 3 universal principles that we hold dear across everything. It applies to everything that we do, all new investments. One is a commitment towards diversity, equity, and inclusion. The second is a real focus and commitment towards managing and mitigating climate risk by reducing greenhouse gas emissions and waste. And the third is a real commitment towards best-in-class business ethics and governance and transparency. Those are universal principles. We have supplemented that in our framework, which is proprietary, by adopting industry-specific, sector-specific guidance from FASB. We are also a signatory to the UNPRI. So we brought the best of breed, incorporated it into our internal framework, and that has become let's call it our Bible. That's our Bible. That's what we apply across the board, across all of our investing and ongoing portfolio management activities.
Amazing, thank you. So turning to the other kind of asset manager guru, Pascalis, how do you work with your clients at BlackRock on constructing portfolios that incorporate sustainability?
So it's been a couple of years now since our CEO, Larry Fink, in his annual letter, in fact, expressed the view that climate risk is an investment risk. And we have also said since then that sustainable transition is a major challenge, but also the greatest investment opportunity of our lifetime. So our engagement with the clients is focusing on exactly these two things: how they can navigate the risks involved here, but also how they can position better for the opportunities ahead of us. And we use really all the tools we have at our disposal: stewardship, investment and risk management, data and analytics, policy engagement, all the help we can get in a very difficult problem. It's important to note here maybe two things. For institutional clients, the one-size-fits-all approach does not really work. All clients are different. Their needs and preferences vary widely. We have institutional clients who do not measure ESG features yet. Others who want to align their portfolios to the UN Sustainable Development Goals, measure carbon emissions, temperature in their portfolio. Some of them, they want to transform really their whole portfolios, or they want impact strategies. Others just want exclusions and screened, let's say, building blocks. So we're trying to be helpful and support our clients subject to their own investment objectives. And then the second observation here is to individuals, to wealth clients, to long-term savers, we offer the opportunity to invest in climate transition and to a net zero economy through a wide range of products that we have launched, additional to the ones we had before. A lot of new ESG funds that we have launched in the last couple of years only. We also recognize that no company alone can really meet the challenges we have in this transition. This is why we're involved a lot in collaborations. We recently launched the Climate Finance Partnership, a public-private initiative focused on renewable energy in the emerging markets. The Decarbonization Partners joint venture with Temasek, focusing on transition technologies. And we also recently gave a $100 million grant, the biggest ever philanthropic contribution by BlackRock to breakthrough energy catalysts. So a range of initiatives that are really collaborative in nature. And then last but not least, our stewardship team. Our stewardship team are the folks who on a day-by-day basis, they engage with thousands really of companies that we're invested in many ways. We have asked companies that we invest in to issue reports consistent with TCFD, or the Task Force for Climate-Related Financial Disclosures, to work on their own targets on greenhouse emissions, achieving net zero emissions by 2050. And we also use the proxy voting process to express investor views on companies' ESG strategies. So a lot of engagements, always driven by our fiduciary duty to our asset management clients.
Okay, amazing. So, there's a lot of variety I'm hearing from all of you in terms of what you're offering and in terms of what your clients are asking for themselves or what you're trying to guide them towards. Richard, you mentioned earlier, you do kind of stand out in that you're working for an organization that's a little bit different to the others. How are you at FAI Institute working with public and private sectors to kind of drive investment into ESG principles in the Middle East?
Yeah, first of all, at the FI Institute, we are totally, as I said, committed to be a champion for ESG. And we are leading the development of an ESG scoring methodology for emerging markets that is fair and inclusive. This is what we are trying to contribute. We are doing that under the leadership of our chairman, who is absolutely concerned by the ESG issue because he is also the governor of the Public Investment Fund, PIF, His Excellency Yasser Rumayyan, and he is also the chairman of Aramco. So he has multiple hats, which is making him very, very concerned by this ESG, I would say, challenges. What is very interesting to mention before answering to your question is that our friend from BlackRock said, he said, Larry Fink highlighted 2 years ago that we should do investment for good, to summarize almost. And we see this trend accelerating suddenly, while when I was the executive producer of the Davos Forum, we started talking about sustainability 20 years ago. And 20 years ago, the polling of all the audience coming from global CEOs in the room were putting climate change issues and sustainability as #1 issue. It took almost 15 plus years to make it as today a real priority. And I think that definitely we have no other choice now. We are against the wall. It's not just to make good investment or investment for good. So how are we trying to bring a modest contribution as a not-for-profit organization? So first of all, I said, we are trying to educate. Very important, because you see a lot of companies, even small, medium-sized companies, who have no real understanding about what they should do to be ESG compatible. So we are trying, thanks to our Think pillar, which is our lab, we publish high quality, I think, research calling attention to the most compelling sustainability challenges, such as deforestation, biodiversity loss, etc. And we have another pillar, which is called Exchange, which is hosting FII every year and many other FII series, where we organize, I would say, platforms to discuss, as you are doing very well today, on sustainability topics, including panel tracks on alternative energy, sustainable agriculture, water conservation, and these were the topic which was also discussed at the last edition of FII in October. And last but not least, we work very closely with the private sector, but more importantly with medium-sized companies, because we have a third pillar called ACT, which is our investment arm. Of course, we're not investing the level of investment that BlackRock or InvestCorp are doing and making, but in our small scale, and this is quite unique for a not-for-profit foundation, we support a global community of entrepreneurs and innovators with direct investment in early stage companies. We already invested in sustainability technologies in agri-tech, in space exploration, and also in the decarbonization of aviation. And one of the companies that we invested recently already was listed in the NASDAQ, called Lilium, which is one of the low noise 7-seater, you know, the eVTOL aircraft, which are now growing, coming from Germany, reducing emissions and travel times and infrastructure costs. So this is how we try to work with the public and the private sector to be a catalyst, but we should not forget the small, medium size, because the transformation of how do we mentally think ESG will come from the very early stage. This is why education is very important. So this is to mention few of our actions to be part of this global conversation and action related to ESG.
That's really interesting. You raise a couple of particularly interesting points to me. This idea that businesses don't know how to align with ESG goals all the time, especially the small, medium size. And it kind of raises the point of how we measure ourselves against that and how we measure clients.
And you know, sorry to insist, the rating, we think that the current rating agencies are unfair because we are thinking of the very West approach, but not all countries can be at the level of ESG than the United States of Europe. So we definitely need to fight for having a more ESG inclusive approach. This is how we will build a global ESG world. Or we will always have Africa behind, and we'll have some countries even in Asia behind. This is very important to mention and to highlight.
No, that's interesting. I'd like to turn to Rishi, actually, about this point on measurement. You mentioned, Investcorp are managing $40 billion and working with a whole range of clients. How do you measure, after you've worked with those clients, how do you then measure against the ESG principles how successful you've been? Do you actually have any kind of examples you might be able to share with us?
Absolutely. The famous saying, right? If you can't measure it, you can't improve it, and you can't manage it, right? So measurement goes to the heart of what we have to bring to the table by definition. And I was, as I was saying earlier, the responsible ecosystem framework that we've put in place has individual pillars, the 3 pillars of EC&O, and under each pillar, we have KPIs, 5 KPIs under each pillar. And for each KPI, we have specific metrics. Now, the beauty of our business is that as a private markets focused investor, we have 2 major benefits. One is that we have a long time horizon over which we can not just measure the outcomes, but make a real tangible effort towards improving those outcomes. And the second is precisely to that point, we have the ability to influence outcomes, right? We are not just a passive, it's not just a, shall I invest in this or not invest in it decision for us, right? The decision for us is, we know that there are certain factors within a particular investment opportunity that are positive from an ESG perspective. There are certain other risks from an ESG perspective, and we make a commitment to improve on both dimensions, right? And that ability to influence outcomes is really powerful when it comes to firms like Investcorp. You talked about examples. I mean, the best way to highlight the success of any particular framework, including ours, is case studies or proof statements. One that I can use, which effectively ticked all 3 of those important pillars, the EC and the O, is actually a company that is well known in the UAE. It's a platform called Fresh to Home. They are a direct-to-consumer, internet-enabled fresh seafood and meat provider. Now, this is the company that we invested in a couple of years ago. They use artificial intelligence-based technology to do 3 things. One is to radically reduce the friction associated with the use of middlemen, as well as the supply chain, in bringing fresh seafood and fresh poultry from the sea or the ocean or the farm to your plate, right? And as a consequence of that, they are able to significantly reduce the waste that is associated typically with food by a factor of 90% relative to the industry average. And that is the kind of impact that this company has had in terms of providing a sustainable source of fresh seafood to its consumers. Second, because of the fact that they are working directly with the fishermen, they are able to A, improve outcomes for the fishermen by about 20% in terms of income, and B, they are able to create additional employment within those ecosystems that they operate in, to the tune of about 17,000 additional jobs that they've created just over the course of the last 5 years. Now that is, a very illustrative example. These are KPIs, these are readily measured. We know exactly what we are looking to achieve and how we are progressing on that journey.
Okay, excellent. Thank you very much. I know Fresh to Home, actually. I've heard of them. This is interesting.
I hope you're a customer and a satisfied customer, Claudia.
Big fan of seafood. I'd like to turn to Rola now, because we're kind of venturing down the path of talking about real life examples. Standard Chartered, I understand, have released actual kind of green accounts as part of its sustainable product framework that clients and customers can sign up to. Can you tell me how those accounts are actually helping your customers follow sustainable objectives and invest in the ESG mandated?
Thank you. So as a country, the UAE has come a long way in meeting the challenges of energy and climate change under the framework of the Vision 2021 and the strategic plans of each of the Emirates. Now, if we look at the UAE, it is one of the key markets globally for Standard Chartered. And it's the first to witness always some of our innovative products and services that we launch. So sustainability account, which we've launched recently as part of our products, is a key example of this. We launched it from the group on a global basis. The UAE was the first country to access this product. And as a matter of fact, Aldar Properties was the first company in the UAE and globally to open and fund the account with us on a global basis. And this product, which is offered to large corporates, what it does is provides clients with the opportunity to contribute to sustainable development whilst maintaining daily access to their finances for critical liquidity management needs. And deposits in sustainable accounts are used to fund sustainable projects based on our Standard Chartered's green and sustainable product framework, which is very much aligned to the United Nations SDGs. The surplus of the cash is used in addressing some of the world's biggest long-term threats, including climate change, financial exclusion, which really are impacting countries across the globe, including the UAE. And it's really worth noting that flexibility really to access the liquidity for daily operations at the same time while being able to support the sustainability agenda of the UAE. This helps in encouraging corporates to contribute to fulfilling the UAE's objectives to achieving net zero by 2050. At the same time, it enables companies to actively participate in achieving a brighter future for the generations to come.
I'd like to stay with you actually to explore one of your other products on offer under a kind of frame of real estate, because this is part of our Building the Future Summit. I was wondering if you could kind of explain to me the premise of sustainability-linked loans and how you think they're kind of helping transform the real estate sector specifically in the MENA region.
Okay, no, thank you. So if we look at the global level, the drive to establish a green economy has accelerated. And this is really powered by the convergence of environmental and societal forces. So if we look at the MENA region, it's really no different. And countries across the region, if we look at within whether it is Saudi Arabia, UAE, they've already announced their net zero targets, and they've kicked off their journey towards creating a greener economy. And an example would be the COP28, which is being held in the UAE in 2023. But at the same time, we are also witnessing an increased interest in sustainability, with it becoming a core focus for many of our businesses, investors, and lenders across the region. So it's really, there's a pressure and a desire to do something meaningful across all industries. If we look at given the intense focus of investors, the society, the governments, at the same time as regulators on sustainability. So everybody is going in one clear direction. And we expect more and more demand for sustainability finance in the MENA region over the coming years. So the real estate sector will obviously be in the same situation. And the way they do it is they use sustainability-linked loans in this sector. We led some to Majid Al Futtaim, where we offer a loan, but against certain sustainability-linked targets within the company. And real estate companies, they address a wide range of goals through these loans, rather than just focusing on one specific building, which helps them to look at the entire portfolio and areas such as water, and waste, and not only energy and emissions. At the same time, also gender equality. And helping meeting these goals will incentivize through a change in pricing. So if they don't meet the goal, the targets that we put in the agreement, the loan agreement, the pricing will increase. So this will encourage developers to focus on meeting the sustainability objectives, at the same time further their ambitions, which will lead to an increase in green financing for green buildings. At the same time, we've gone beyond this, where we're looking at the consumer products, like offering green mortgages to support the eco-friendly and sustainable homes.
That's interesting. I like the idea of incentivizing through pricing. It's something that all clients, I think, will pay attention to. Staying on the real estate theme, and back to you, Rishi. I know InvestCorp also invest in real estate as part of your portfolio. How do you keep ESG principles in mind when you're investing in real estate? Bearing in mind you've also got other considerations like equity and inclusion, affordability, and profit, right?
Yeah, yes, spot on. And by the way, I should say that the principle at play over here is really letting our investors' capital, speak for itself in terms of expressing their views, their values, in terms of how we deploy it and how we seek to embed core principles of sustainability into that deployment. So taking real estate as an example, I'm going to take two regions where we are very active investors in a certain sector, which is housing, multifamily residential in particular. In the US, where we are a top 5 multifamily investor, our core focus over there is workman housing, right? That is basically the equivalent of making sure that we are providing cost-effective housing solutions to the broad base, the mass market of middle-income Americans that need that cost-effective rental housing at affordable price points. That's inclusion for you, right? One of our core principles. Over and above that, as a responsible citizen, one of the programs we've initiated in our investment properties is we provide scholarships to meriting students that live within those communities, that are from a diverse background, thereby, further reinforcing our commitment to promoting diversity and helping being a responsible member of the communities that we operate in and serve. Similarly, in India, one of our core pillars of our real estate investment strategy over there historically has been investing in affordable housing over there for the mass market. The other element of real estate, which sometimes goes a little unnoticed, is real estate. If you think about the existing stock of buildings globally, it's one of the top 5 contributors to the greenhouse gas emissions, right? So if you step back and you think about if we need to be net zero by 2050, what needs to happen? The real estate stock, the existing stock, needs to transition to a much lower carbon footprint than it currently occupies. So that is another area where we put in a lot of effort and focus as an owner of real estate assets, making them more energy efficient, reducing their utilization of not just energy resources, but broadly natural resources, including waste management and other natural resource management, and making them just more sustainable, in a single word, and resilient for the future.
That's really lovely, actually, to hear how you're working with communities and giving back. It's a fantastic initiative. I'd like to turn to Richard, because I understand that the FII Institute is also working within its community and its stakeholders to actually try and recover some of the damage already done to the environment. And I'm really interested to hear more about that.
Yeah, I think it's a very important topic, especially now in this time where I hope we are starting to definitely exit from this pandemic. But, you know, we supported at the Institute our community by first never stopping, to be honest, to support precisely the community in the first place. I will be a little bit provocative because this is what we are doing today, but when others retreated behind the screens, we gather in person in Riyadh in January of 2020, in Riyadh in January of 2021, and again in October, with very strict health precautions and rules. You know, we hosted 5,000 global CEOs and decision makers. And thanks God, we had 0 case of COVID even after the conference. So I am convinced that our mandate, our duty at the Institute is to continue to do it, because it has never been more important than now to meet and discuss and propel the future in person. It's really my personal conviction. You know, just while we were waiting to start this conversation, our panelists were trying to say, hey, when can I see you? Come, have lunch, have coffee with me, you know, and I think it's absolutely important. But we see more seriously a period of innovation and accelerated progress emerging from this dark time. So we call this the neo-renaissance. And we want to be front and center, using our tools to remove barriers and lift up the brightest ideas and, I would say, the most powerful voices. This is what we're trying to do, to be really a catalyst and to play this role globally. So we will go outside of Saudi Arabia, we'll go outside of Riyadh, we will be hosting multiple platforms in Europe in April, where we will release the ESG new rating methodology that we are working on. We will be in New York during the UN General Assembly in September. We'll be in Asia in December. We'll be, of course, in October in Riyadh. We'll be in June, probably in Africa, because we need to be inclusive. And I think this is how we want to support the community. Back to your question, we want to encourage all stakeholders to invest in humanity, and humanity is definitely everywhere in the world. And this is our mandate. And I know that this is a mandate of all the stakeholders that we have today in the panel. I know very well BlackRock. I know very well Standard Chartered. I know very well InvestCorp for years. And I know that everything they are doing for years and years, as it was mentioned, they didn't wait 2 years ago, 3 years ago, for 30, 40 years. The founder, God bless his soul, of InvestCorp was an amazing guy, very inspiring. And I mean, and really we miss him every day, because these were the real entrepreneurs who were always investing for good, with an amazing, I would say, personal mandate to support the community, as Larry Fink is doing it today. And as I know, all our friends here are doing it through their brands.
I'm with you, Richard. I can't wait to meet in person as well. I miss having these events live. I mean, I am also very grateful, though, that we have this technology, that we're able to do something like this today. And I'd like to actually end on a technology kind of focused question, because it's something that we've not quite touched on yet, apart from the fresh to home AI. I'd like to go to Pascalis and ask about, in terms of data collection and in terms of how you at BlackRock are using data to assess how green a portfolio is. Can you tell us a bit about how you were using that?
Of course, and first of all, I would echo what my colleague said at the panel. First, if you can't measure it, you can't manage it. And secondly, you do need the data and also the analytical capabilities that give you more nuanced outcomes on a world that is more relative and it doesn't have the same starting point. For instance, you need this transition to be sustainable, but also fair and just. Give access to people to energy prices that are affordable and to reliable and affordable energy sources during this transition. But back to data and analytics. We all started with macro models and basic temperature scenarios. I think we have moved along. A long way, actually. At BlackRock, we're building dynamic, probabilistic, sector-specific models that are able to take into account policy, technology, consumer preferences, and in the end, deliver implications for energy prices, for asset stranding, which is a big issue, and for a climate-adjusted value of individual securities. So much more complex, much more nuanced. We have a proprietary investment and risk management platform called Aladdin. Aladdin Climate is the module within Aladdin that our ambition is to make it the standard for assessing climate risk and helping client portfolios navigate to a net zero economy. And finally, we have made a lot of partnerships with specialist companies as well as investments. Companies such as Rhodium, Beringa, Clarity AI, to augment our own capabilities in measuring and analyzing sustainability-related data. Of course, a lot of work is ahead of us. As I said before, no company and no industry can do this alone. This is why industry coalitions and, of course, governments and regulators have a significant role to play here. With taxonomies, with standards, and with more aligned approaches in general on data challenges that we undoubtedly face. Thank you.
We have a long way to go, but it's going to be a very interesting journey, I think. I'd want to thank you guys. It's been a really interesting conversation. Thank you so much for finding the time to speak to us today. That is actually all we have time for. So thank you to you, and thank you to everyone that's been watching. We'll hopefully see you soon.